Hey, welcome back, multifamily investors. It's a beautiful day in Seattle. It's just a little noisy as we are in Burien near SeaTac. The airport's right there. But we came out to take a look at this triplex I wanted to see. It's at 950. From the pictures it looked pretty good, but we're walking around the outside and I'm looking at this dryer vent that I don't think has been cleaned since the 90s. It's pretty bad. So there's a crack in the foundation down there. But let's go take a look inside and then we'll put the rest together. First things I'm looking at is, if you're going to list, why would you leave stuff like this unfinished? It's kind of, you're trying to make a first impression here. Come on in. A lot of cracked tiles. And what I get a little unevenness in here, and I think that's what's happening. You got a line right here in the tile that this floor is sagging, and so those have all cracked in there. The kitchen looks pretty good. Butcher board, if you can hear me. Kind of a weird window situation going on, but it's open. Probably lots of nice night. There's kind of a funky smell though too. If I were going to list this, I would start all over again and just clean the thing up. Wash and dryer is nice. You have this little loft space that you can climb up into. 2 bedrooms and a full bath. It does have some nice beam kind of features to it, some wall heaters, private backyard, but it does kind of stink. That could be cleaned up though. It's probably in the carpet. And we can only see this one unit. There are 3. This is the upper unit. It's unit C. There's 2 below. They're all 2 beds. This is one of the smaller ones. I think you could probably get 1850, 1900. Comps are going to tell you more, but airplane noise, the location, I'm gonna skew it down a bit, but I'll show you the numbers next.
Hey, welcome back, multifamily investors. So you probably just saw the tour of this property. I'm a little disappointed because it looks so cool, like mid-century look. We couldn't get in this unit. We only could get in unit C, which is the upper one. But I loved this design, this look to this property actually. And it's off a busy street in Burien, right next to the airport. You can see hangars over there when you get up top. And if you saw the video, you saw the airplane noise. So the pictures make this property look probably way better than it is in real life. But this unit looks pretty good. I didn't get inside this one. Just to refresh your memory on this. And then I want to get to unit C that we actually toured. Excuse me as I scroll through here. Backyard, parking, proximity to parks, blah, blah, blah. Okay, so this trim needed to be fixed here. Looked pretty crappy. The roof is in poor shape. In fact, look back at this. I don't remember this being this nice. This might be an old picture. I feel like there were weeds growing up in here now. And it was empty. If you saw the tour, this looks way nicer in the pictures than it did in real life. So a little worn, had some bad odors going on. Okay, anyway, they are saying it's been on the market now, I think 3 months. I have to go back and look. They've had one price drop from $1 million to $950 now. I'm going to run it at $950. It's built in 1948. They entered in, not a lot of expenses, which we always know is, probably missing something. There's always maintenance and repairs of some kind. $7,240 in taxes, $2,400 in insurance, and only $200 in water, sewer, garbage, which makes me believe that maybe the tenants are paying their share, or they're billing back to the tenants, and that's why the total monthly income is $63.90. But I'm just going to budget in here the same rents, and I'm not going to bump anything either. Not going to make improvements. Rents have been kind of flat, in our area, in certain areas. So we're going to just stick with what it is, the actual, and not do a lot of pro forma here, market. So at $950 with 25% down, rates have come down a hair. So you may be able to get under 8 now. Maybe as an investor, I'm not quite sure if it's possible. It just fluctuates so much. And I'm running this as a non-owner occupied investor with 25% down. If you do owner occ, you can get in obviously with a lot less, but that means you're going to be probably out of pocket to start this deal at about $266. And then I'm assuming everybody's going to stay put. You're going to get that unit rented at $2,000 upstairs. Managing it yourself, you got to budget something on a property this old. Just a couple $100 a month even. I don't use just a flat percentage because I feel like every property is different, and some has upgrades to the plumbing and electrical, some doesn't, or appliances. And so when I see these tools or these spreadsheets online where they just estimate like 8% for M&R, I prefer to look at the property itself and kind of assess it based on its age and condition and everything else. But I think $200 is probably reasonable there. And then some miscellaneous stuff for maybe landscaping or something else. Okay. Again, this is just a snapshot. This is not the deep dive analysis that you may be thinking I do. I just want to get an idea if this is even worth taking a second look at for some clients. Because some clients, they're looking for a particular market, and they don't mind losing a few $100 for the first year until they can stabilize the property. So it depends. Now, this one says K1 self-managed at $116 a month. Not a lot of wiggle room, but again, if you don't have any maintenance repairs that month, it might be a couple $100 more. So I take that, and then I look at my board, I look at my list of investors, I keep in mind like who's looking for Burien or South Seattle, South King County, under $1 million, has maybe two and a quarter million, and meets their criteria. So some people want more turnkey, some people want a heavy lift, value add, a lot of rehab needed. And so I take all that in consideration. That's why I come back, I do this quick snapshot. I go, okay, who does this fit? Maybe nobody. I do this a lot all week, looking at deals, trying to see, and there's not a lot of matches, unfortunately, because inventory is still pretty light, and the numbers are tough. But if rates come down, I guarantee you, if rates come down, things are going to get hot again. So this is the time to take advantage, kick the tires on some deals, get something under contract, ask the seller for some credits towards your closing costs, or rehab, or whatever you want to do. There's all kinds of ways to craft an offer these days, as usual, really, but to be more competitive for buyers these days. All right, not fantastic. I hope that helps. You can see there that the numbers are, you probably wouldn't lose money, but who wants to make less than 1% on their money, from day one? We think we can do better. Also, if you change this real quick, some people definitely love a property, want to get into it, but they want to give themselves more wiggle room. They may be willing to put in a little bit more cash and improve that LTV, and then give yourself, $800 a month, which is definitely a little more breathing room. And your DSCR here looks closer to 1.2, which is on a big deal. We like to see it 1.2 or better. So that's actually pretty good there. All right. I hope that's helpful. Thanks for watching.